Are you looking to save for college? Well, today I'm going to give you 5 reasons why a 529 plan may not be the right fit for you. Also, be sure to check out my other video where I give you 9 reasons why a 529 plan is the best thing for you. But before we begin, remember to like, subscribe, and share our channel. And if there's a topic that you want us to cover, be sure to include it in the comments section below or send us a message, and we will cover it in a future video. I want to first start off by saying that I'm actually a big fan of 529 plans, but I wanted to create this video because I know there are some people who don't like 529 plans, and I want to know some of the disadvantages before they decide whether or not to choose one. Now, unless you have a lot of money set aside, hundreds of thousands of dollars, or you have a very wealthy relative that's going to pay for your child's education, most likely you're going to rely on some sort of financial aid, or your child is going to rely on some sort of financial aid. One of the disadvantages of a 529 plan is that it counts against you on the expected family contribution when you're doing the FAFSA application. And if you're not familiar with the FAFSA application, that's the application that you complete to determine how much financial aid your child is going to receive for college. And if you have a 529 plan for your child, then a portion of that's going to count against you on your FAFSA application. The second reason why you may not want to consider a 529 plan is, what if your child does not go to college and you don't use the money for any kind of qualified distribution? Well, if that's the case, you're going to have to pay 10% penalty and income tax on the earnings in that 529 plan. So that's one of the disadvantages. Also, not all states conform to the withdrawals. The Tax Cuts and Jobs Act that was passed in 2017 allowed distributions, qualified distributions that are non-taxable for K through 12 expenses. So a parent can use the 529 plan to pay for K through 12 expenses. However, not all states conform to that rule. And if you take that money out for K through 12 expenses, if you live in a state that does not conform, such as California, you're going to have to pay income tax and penalty on that distribution. The third reason why a 529 plan may not be a good option is because not all 529 plans are good. You really have to do your research to find a good 529 plan. And some of the key things that you should look for when you're researching for a 529 plan are good investment options, low-cost investment options, and obviously the deductibility of that contribution if it's within your home state. So bottom line is, not all 529 plans are good, and you should research the best plan for yourself. The fourth reason why a 529 plan may not be a good option for you is that not all states offer tax deductibility of 529 plan contributions. So if you're in a state like Ohio, Maryland, Virginia, some of these states offer a tax deduction for contributions you make to a 529 plan. But there are some states, such as California again, that do not offer a tax deduction for contributions that you make to your 529 plan. The fifth and final reason why a 529 plan may not be the right choice for you is because of the investment options. Not all 529 plans have great investment options, so it's important for you to do your research and find the best ones that have a good broad-based types of investments that you can choose from versus having very limited types of investments. Also, one thing to keep in mind as far as limited investments are the cost of those investments. So dig a little deeper, find out how much the cost of those investments are and whether if they're index-based to see if it's a good 529 plan for you. So I just went over the 5 reasons why a 529 plan may not be the right choice for you. But I want to highlight again, as I said in the beginning of the video, that I'm a big fan of 529 plans. So all those 5 reasons I gave you, there are many mitigating reasons why those may not be justified reasons for not doing a 529 plan. So for example, the most common one that we hear are a 529 plan counts against financial aid. Well, my response to that is, don't not put into a 529 plan with the hope of getting financial aid later on, because maybe your child may not get financial aid. So why not save for college and make sure that you have that money available in a tax efficient account like a 529 plan, so that way you can assure that your child's college education is paid for. The other most common reason we hear is that 529 plans, if I take the money out because my child gets a scholarship or because my child does not go to college, I'm going to get taxed and penalized for that. Now, technically that's true, but the 529 plan is so flexible that you're able to really change the 529 plan to a different beneficiary. If your child gets a scholarship, you don't have to pay the penalty. There's a lot of flexibility that exists within a 529 plan that still warrant you saving in a 529 plan for your child's college education. And then the last one, which I also hear, is that, well, my state does not offer a tax deduction, so I'm not going to put into a 529 plan. That's a really bad way of looking at it. Just because your state doesn't offer a tax deduction doesn't mean that you shouldn't save for your child's college education. You can still contribute to your state's 529 plan even if you don't get a tax deduction, or you can use another state's 529 plan and even if you're not getting a tax deduction. Thanks again for joining us for another edition of the ACap Recap. Please remember to subscribe, like, and share our channel. And if there's a topic that you want us to cover, make sure you send us a note or a comment below. Or if there's something that's related to this video, make sure you comment below and we'll be sure to cover any other topics in future videos.